Know the difference with Annex Wealth Management? When Dave Spano says know what you own, it's not just a marketing phrase. To help explain what that means, I'm joined by Trevor Nargis, Supervisor, Trading Team at Annex Wealth Management. Hey, Trevor.
Hey, Danny. Happy to be here.
When we invite people to click that Get Started button at annexwealth.com, it puts a couple of things into motion. The wealth manager establishes contact, talk things over, learn more about the person or the person involved, and then work to gather material the investment team will use for analysis. Trev, what does that team need to begin?
Yeah, it's actually pretty easy. Typically, the most useful information for us is just going to be your recent statements. That'll help give us a lot of the information we need, such as what investments someone might hold and the quantities of various stocks, bonds, ETFs, mutual funds, you name it, that might be held in an account.
When you and the team have that stuff, what's the process? Just put it in the blender?
In a way, but I want to give a big shout out to our data analytics team. They play a big role in helping us compile all of that data that's provided. They put all of that relevant information I alluded to from the statements into a format that myself and the investment team can then work with.
When that happens, as you're pouring through that data, are things starting to pop up?
Yeah, we start to see some higher level insights of what's going on underneath the hood, but we can see a lot of stuff pop up because we deal with a wide array of unique individuals with different situations and different backgrounds. We can see things like accounts with a laundry list of positions or maybe only a few individual stocks. We can also see things where people might have lots of accounts scattered all over the place or even at different advisors and custodians.
Does a lack of diversification at some point start to emerge?
So yeah, we will see a multitude of different accounts, and we take all that into account when looking at both the individual account level and the overall household level. But with the lack of diversification, we see a lot of different things, but we can see both under diversification and over diversification. For example, we could see a large concentration in a small handful of something like healthcare stocks, or even a big chunk of the portfolio invested in one single company. Now on the flip side, we'll sometimes see over diversification via someone owning several different target date funds and or asset allocation funds. So those products in and of themselves aren't inherently bad because at its core, diversification is a great thing for many individual investors. However, by owning several of those previously mentioned products, you can end up with a lot of overlapping investments and create redundancies within the portfolio.
We're with Trevor Nargis, Supervisor, Trading Team at Annex Wealth Management, talking about the Annex Wealth Management portfolio review. How about risk? Can you see when something's riskier than a client should have?
Yeah, so that comes down to us looking at the overall account, but also individual positions. So we kind of balance all that along the way. We can look at how aggressive are the equities. Are you maybe geared more towards growth names versus value names, things like that. But what's really important to take into account is risk appetite versus risk tolerance, if you will. That's always super important to note.
I'm sure you see portfolios that are loaded up with proprietary investment products. And to be clear, that's an investment that was invented, the XYZ Advisory Company Super Duper Fund, right? You see those things.
Yeah, so there's instances where you could see someone who comes over from another advisor and maybe their whole portfolio consists of that firm's product. So that could be a lot of, that firm's own ETFs and mutual funds. Maybe they're good, maybe they aren't. This could be because the firm might make commissions off of having their clients in a select list of products, which might incentivize who's ever constructing the portfolio to put the client into those products, even though there could be better options elsewhere. It's important to note, Annex, we don't operate that way. We're a fee-only fiduciary, so we aren't tied to one fund company, and we have a broader universe of investments to choose from as a result.
So the investment team, they've done the forensic analysis. We can then get back with the prospective client and with the wealth manager, lay things out in black and white.
Yeah, that's exactly right. The whole goal of the analysis is to slice and dice the portfolio and point out what we see. We can talk through what's good and where there might be room for improvement. Now, if we see areas where improvements can be made, we definitely want to make that known and have a conversation around it to help someone better understand what they might own and why they own it. Our team looks into a wide array of things such as factor exposure, sector, country, fundamental data points, etc., and we want to talk through all that.
Our local investment team is not hidden, Trevor. It's not uncommon to see you guys engaged with wealth managers and clients in person and on Zoom.
No, so not at all. Our team does a weekly podcast called the SWAT Podcast. It's available on an array of platforms for anyone in the public to tune into. But like you said, Danny, we routinely have members of the team jumping into meetings to discuss what we're seeing, what we're watching, and what we're doing within portfolios.
Yeah, I see it all the time, and I think it's really effective. Investment, retirement planning, tax planning, estate planning. It's what we do as a fee-only fiduciary. Know the difference. Website annexwealth.com. Click that Get Started button. Trevor Nargis, Supervisor, Trading Team at Annex Wealth Management. Thanks for your time.
Thanks, Danny.